And we did have Wilson on again, Mike Wilson on earlier this week. You're at the same firm with different viewpoints to some extent, although you're a little bit, I think, hesitant about the near term, but above 3,000 by the end of the year, which is in stark contrast to where he is.
Well, I mean, give the guy credit. I mean,
last year was right.
The market's been unfulfilling to the bulls and the bears. That's been right. But the inevitable outcome of a market that's gone nowhere for a year and a half, there's two inevitable outcomes. Number one is the bearishness builds, right? Because no one's made money in stocks for a year and a half. We've had $250 billion come out of mutual funds and ETFs. The percentage of bulls is very low. But inevitably, the market breaks the upside. In fact, in the last 100 years, there have been 7 times where the market's been within 5% of an all-time high, and it hasn't gone anywhere. And every time it breaks the upside, which makes sense because reversion to the mean, the markets over time go up, and it hasn't gone up for a while. So unfortunately, people are looking backwards. So I think inevitably the market's going to break the upside. Maybe not next month.
Well, you said above 3,000 by the end of the year.
We're going to have the year over year. The market rewards rate of change, right? And we had flat earnings this year. Right. Well, next year we're going to have positive earnings because of the year over year. The market anticipates that. I think they'll anticipate that in the fourth quarter. The other thing is the market always rallies right before a presidential election.
We're in all these always and never situations.
Well, you know what's interesting about that? So in the last couple of days, we've had the yield curve invert, right? Pretty negative. But the dividend yield on the stock market is now higher than the 30-year.
Right.
Pretty high. The last time that happened was March of 2009.
Yep.
How much discussion has been about the yield now attractive? How much discussion about the yield curve?
You think if Bernie Sanders has a 10-point lead, the market's going to rally ahead of the election?
No.
Would you believe Bernie has a 10-point? I just wouldn't buy it. But if he has a 10-point lead and it looks solid and something happens, I would not. The market's not going to rally if Bernie has a 10-point lead.
Keep in mind, the number you have to fixate on is the third quarter 2016 GDP number. It was 1.9. We re-elect presidents when the number in the third quarter is higher than it was when they ran the first time. So I think that's the number. It's got to be above 1.9.
Great. Let's have a big trade war leading into it.
So I think you're going to have a trade resolution at some point.
What do you think, Monica?
It's going to be very boring for you. I agree.
I
don't think you worry about Bernie's 10-point lead, though, until next year. I think there's still a lot of momentum. Central banks will continue to be accommodative into year-end. Earnings still look okay, as you guys were just talking about this morning. That brings us higher into year-end. And then next year we worry about whether Bernie's leading or not.
We keep talking about TINA. We're bringing that up again. There is no alternative when you look at these low yields. Maybe that's the party before an actual recession that could be signaled by these things, because inverted yield curves, it's usually 18, 20, 22 months.
Exactly. And it's a risk because it pushes people into things they wouldn't normally buy because they're searching for yield. But again, it doesn't look like valuations are stretched. So if you're buying equities at a reasonable valuation, I'm actually okay with that. And the yield thing is a big question that everyone I work with asks, because what do you do with your cash? You have the whole world to invest in. The U.S. still looks so much more attractive than many other places.
What would be a valuation that would concern you? What's stretched? What's okay and what's stretched?
With modest growth, north of 19, 20 times, and we're nowhere near that.
Right.
So at this level, we're kind of right about average, around 16 to 17. So go on.
You know what's interesting about it? If the Fed were to cut rates, right? They don't want to cut rates because they don't want the economy to run hot. You have a president who wants the economy to run hot. If they were to cut rates next year, or this year, and it helps next year, economy gets hot next year, you have a China trade war, then you have a recession 2021, and the stock market, the yield curve normally predicts 2 years. That would be right in line with why the yield curve is inverting right now. If we're going to have a recession tomorrow, the yield curve should have inverted a couple of years ago.
This will be something to behold over the next year. I think it matters. Maybe not yet. Maybe you're right. And early on, I think President Obama, he was down 10 points to some generic candidate.
It's still very early to make a call on where we'll end up.
It's fraught with, this guy in the White House, he obviously is a bit of a gambler. I mean, because we're not that far from the election to be taking on China and some of the other things, don't you think, Grasso?
Well, he's been the first person to ever do this on both sides, on Republicans and the Democratic side. He's the first person to try to pull these levers. We've been complaining about how unfair it's been for years, for decades, and no one has had the ability to do anything, and he's actually trying something. So that's the tailwind for Trump. Although he's gotten a lot of pushback, No one else has done anything, and no one else has made any progress.
It's unbelievable. How long does it take to actually do something like that? In a 4-year term, it seems like a long time, but it's going quickly.
You know what I'm really tired of hearing? That China can wait them out. China can wait them out. Well, Apple's pulling out or looking at pulling out 20%. And you have now Google looking at pulling out. You have all the other retailers looking at pulling out or sourcing somewhere else. Do you think China wants to lose that? Do you think that's ever coming back to 100% China? It's not. China doesn't want to lose. You know what's off the board? 2025. China 2025. They have a demographic problem. And now they have a Trump problem. And now they don't want to lose. So they are more desperate than the United States to have a deal done. So I'm so tired of hearing that false statement that they can wait Trump out. They'd want to win, and they're losing.
The other day, I looked up per capita income in China, because you saw Bernie, I think yesterday, said that no one's done more to alleviate poverty than China. Yeah. Anyway, $16,000 is the average per capita. And that's not horrible compared to a lot of parts of the world, but we're 50 or 60, whatever it is here. So, I mean, if they want to keep it going, they've got a dog in this fight, too. I mean,
look at the second tier and third tier cities in China. The numbers that you're talking about aren't even there.
Right.
These are
the best numbers.
Exactly. They're catastrophically low.
Right. And they got to keep it moving, or people are going to want more.
Exactly.
Anyway, you don't get defensive about Mike Wilson.
He's a friend of mine.
He is. And
we're Cubs fans, where your Reds are killing us.
So the Cubs took it to the who did they take it to yesterday? The Mets.
Well,
again,
they
right?
had 10-1. They gave up 6 straight runs. It was, painful.
They still kept it going. See, Mets have lost 5 straight. Did I not say that they'll get you where you where you're optimistic?
Get you excited.
Get you excited, and then right to the very
chop it
last
right.
minute.